How to analyze a multifamily deal or apartment complex the easy way. Let's dive into it.
Welcome to the Smack Fest, the beat down. The SWAT team is here on another beautiful day of shutting the week down.
And hey guys, for just meeting, welcome to the channel. My name is William Dauria. I'm a full-time real estate investor. I teach for free on YouTube. If you're interested, be sure to subscribe. Today we're going to talk about how to analyze an apartment complex. Now this in context is generally everything from 5 units all the way up. And this is the simple, down and dirty way to determine, is a deal at all? And for this example, we are going to use a 30-unit apartment complex. They're selling it for $2.3 million. So the very first thing you want to know is, what is the NOI? Now, if somebody is presenting this to you, like a professional broker, for instance, they're going to have this stuff done, okay? And you can call them if you don't see this, but it should be in like the initial packet that you don't even have to sign a disclosure for, okay? Let's say that the NOI on this property is, and NOI is net operating income. This is after all expenses, including insurance and taxes. So when you're running the mortgage numbers to figure out what your numbers are going to be, like your monthly payment, make sure you exclude those because the NOI already took those out. It's very important because you'll be double dipping on expenses if you don't actually exclude those. They've already been excluded. So your NOI is just that. If you were to have paid cash for this property, your NOI would be the NOI. You would get that cash money in the bank account after all expenses paid. That's a good way to remember and to look at it, okay? But for this case, we're going to assume that the gross income is $300,000 because they're going to give you a gross income as well, okay? Oh, by the way, super simple. 30 units, $300,000, pretty easy math, okay? But get this, guys, typically the NOI, the net operating income, is usually about half of the gross, okay? That's a quick down and dirty numbers. So if they're way higher than half, for instance, you want to throw up some red flags. You really want to dig in deep. You always want to dig in deep anyways, but that's going to throw up some red flags. So NOI should typically be about half. So we're going to say for this case that the NOI is $150,000. I'm making these numbers up, okay? $150,000. That's how much you make in your pocket every single year. Now you might be asking, okay, it's $2.3 million. Is it a good deal? Well, this is how you figure it out. So you get an NOI of $150,000. Let me grab my calculator. So you get $150,000, $150,000. You're going to hit divide, and then you're going to find out this is how you find your cap rate. 5 cap, or it usually starts with like a 3 or 4 in commercial, and then it'll go 5, 6, 7. Sometimes you'll see an 8. 9s and 10s are a little bit more rare. I do have them. I have above a 10, but they are rare and hard to find. But this is what's important, okay? You want to find out 2 things. You want to find out what your current cap rate is that you're buying into today. That's what we're going to do right now. So $150,000, I know in my area, let's just say they typically sell for a 6 cap. So you hit divided by 0.06. That would give you, oh my gosh, this is hilarious. Okay, I was pretty darn close for completely guessing. $2.5 million. I don't know if you can see that. $2.5 million. That's a 6 cap. Okay, so I know it's for sale for 2.3. So we know this is a little bit more than a 6 cap because a 6 cap was at 2.5 million. This is for sale for 2.3. So we know that at a 6 cap, it wasn't it. So for giggles here, we're just going to get a little closer. We're not going to get exact, but 0.065 maybe. That'll give us 2.307. So yeah, I was $7,000 off. I've done this a couple times. So $2.3 million. So you are literally buying in on this property at a 6.5 cap rate. Now, you might be asking, what does all this mean? Okay, you need to understand your market and what a typical cap rate sells for, okay, in your area, because that's the important thing. If you know that everything typically sells for about a 6 cap, this is how you make money in commercial real estate. So you would look at the next thing would be the pro forma. It's the 1 year pro forma numbers, okay? And a good agent is going to be, or a good broker, I should say, is going to be able to give you this stuff, okay? Basically, what a pro forma is they mean, it literally, after you or me or somebody buys it, the market value for this place, and let's say you update the laundry, you add some parking covers, overhead covers in the parking spots, reserve parking. You do these things, your new NOI, after you bring it up to market value, current today's market value, let's just guess the new, it's called the 1 year pro forma. Okay, the 1 year pro forma. What the new 1 year pro forma is, this means this is your potential. Let's say $180,000, for instance. Okay, $180,000 is your new 1 year pro forma. Now, this is why this is so important, okay? And if you haven't been taking notes, maybe rewind a little bit and start taking notes, because I'm going to show you, after I explain this, I'm going to show you a quick, dirty, math that I use, and it's super, stupid simple. You can analyze properties in minutes, okay? 1 year pro forma. This is what you care about, because this is going to tell you what your ultimate purchase price and cap value, cap rate, is actually at. You actually care about where is your cap rate. I like to see my cap rate on a pro forma at 8%, and I'm in the Dallas-Fort Worth area. That is so hard to find. But you know what? I'm not moving my money unless I can find a great deal, or I'm not going to buy anything. I'm not going to spend money on something that's a so-so deal, and I see a ridiculously low return after I put down, 20%, 25% of 2.3 million. Let me do the math on that real fast, guys. Times 0.25. After you put down $575,000 down, I don't want to see, $40,000 a year. I mean, that to me is just not going to cut it. That's not worth moving my money. I could put it basically anywhere with a lot less risk. I want my money to be worth it. All right, guys. So this is what we want to know. You bought it for 2.83. Let's just say you got to this number by raising rents, okay? Not renovations and all, because that's going to move this number up. Let's just say they were under rented. You move the rents up as they expired. So you're at $180,000 pro forma. So you would take $180,000. I want to show you something. Let's say that everything sold at a cap rate of 6% in your area. This is cool. This is about to show you how much value add you just made in 1 year. I want to show you this. This is really cool. So you're going to divide, say everything sells at a 6 cap, $3 million. Just by raising rents in 1 year. You bought the property for 2.3, you raised rents, your property value is now worth $3 million. You made $700,000 in value creation by just raising rents. That is it, okay? Now you might be asking yourself, what is the new cap rate? Because we know that this right here was a 6.5 cap. At $180,000, we know we're probably hovering around like a 7.5, maybe even an 8 cap on that. So let's try this, okay? So we know that your purchase price was 2.3. So at this point, you're only in it for 2.3. Remember? So we'll divide by 0.0. Let's just say 8. That would be awesome if we could hit that. Okay, so that brings us to $2,250,000. I was only off by 50 grand. So we're just gonna stop there. That was close enough. This is basically so close to an 8 cap property, which is golden, guys. Golden if you can get here. Now, you might be asking, okay, how do I really know down and dirty these deals? Are they good deals? How can I do a quick analyzation? Because majority of these properties do not even have a price. Yeah. So if they don't have a price, for instance, and it says unpriced, like a lot of them are, and you might throw your hands up and goes, well, I guess I'll just go back to watching Dancing with the Stars because there's no price on it and I give up. And yeah, no, so if they give you an NOI and you know that your area sells at, say, a 6 cap rate, for instance, which is a little bit high, for instance, let's just say it sells at a 6 cap, you know before you call, and I always do this, I know that the NOI is $150,000. I will write down what is a 5 cap sale price, what is the 6 cap sale price, 7 and 8 cap sale price. So when I call the agent after I've done, you know, at least my basic numbers, and I ask him, what is it currently trading for? That's the term they use. What is it selling for? What is the sale price is what you want to know. They can tell you right over the phone, yeah, we think it'll trade for 2.5 million. Right then, you know what a 5 cap sell price is, a 6, a 7, and an 8. So you know that if it's falling on a 6 or a 7 or an 8, for instance, right then and there, you can say, you know what? I'm interested to go look at this place, because you already know that's a good deal right off the bat. And if they hit you with like a 4 cap or a 3 cap, I mean, you know, most people's interests are higher than that alone. You know it's not going to be a cash flowing property if the 1-year pro forma isn't a lot higher. And the down and dirty secret to analyzing these super quick and say, nope, not worth my time, I'm moving on, is to do this. Now you need to make sure you're looking at the pro forma, not just the actuals. I always start with the actuals, then I look at the pro forma, and then I say I'm buying in at this, its potential is this, is it worth it even at its full potential? Sometimes it's not, and then I can pass it. Is doing this, guys. You have 30 units. Let's say they all rent for $1,000 a month, because I'm trying to keep the math really simple here. This needs to be 100 times that. Basically, your rent monthly need to meet, what did I just say? Need to match, I was trying to say 2 different words at the same time, need to match 1% of what you are in it per month, okay? So if you bought it, 30 units, I'm talking gross numbers, they rent for $1,000 a unit, it needs to be worth, or to be sold for you, for no more than $3 million. Now, if you're paying more than that, but the 1-year pro forma shows that it's much better than that, you know the potential is there for it to match the 1% rule, and it's still worth looking into. Not necessarily worth buying, more looking into it more, okay? So that's the down and dirty numbers, guys. Let's just talk about a 10 unit. If it's a 10 unit, $1,000 a month, that equals $10,000 per month in gross revenue. Easy, guys, $1 million. That's how much that property would be worth on paper. Or if it's for sale for, let's say, $1.25 million, but the potential shows that it's got a 25% upside, for instance, and you can easily reach your 1%, it's the same thing. You use it per door, guys. That's how you're breaking it down. Per door, is it still worth it? On single family rentals, I always look at the 1% rule. If it doesn't even match that, I almost said that word again. If it doesn't even match that, I'm moving on. If the potential isn't at least there to match that, I'm moving on. That's how you get basically through all the garbage and you sift through the ones that are worth it. I wish I could show you. I've got 4 on my desk right now, but I had to sign disclosure, so I can't show you these deals I'm looking at right now. A couple of the deals I'm not sure yet. I'm still digging into. One of them I think it's a 32 unit, and its actual pro forma numbers are an actual 1%. Super excited. That's actually in North Texas here. So anyways, guys, this right here, you're looking for a cap rate. You're making sure that it meets the 1% rule after the pro forma numbers are taken into consideration. I know there's a lot to absorb in this video, so if you guys have any questions, let me know down below. I make several videos per week on real estate investing for passive income. Be sure to smash that like button if you got anything out of this video at all, guys. And until next time, thanks for hanging out all the way to the end, and I will see you on the next one.